This podcast is brought to you by Eastspring Investments Berhad.
Our view is that the US-China ongoing trade war should not deter investors from looking to invest in China, as China today relies much more on domestic consumption rather than trade as in the past. In fact, we would argue that the US-China trade war has increased the central government's urgency towards developing its own expertise in critical areas such as technology and financial market. In fact, what we have witnessed more recently is financial market reform continue to take place, and we have seen more Chinese companies relisting in Hong Kong and China, increasing the depth of those markets. The Chinese market continue to look attractive to us. We are an economy that continues to outpace the rest in terms of innovation, being home to 6 out of the top 10 unicorns globally as per the Huarun reports. And China will continue down its path of pursuing self-sufficiency in key technology, and the US will continue to try and impede China's progress regardless of who wins presidency to maintain leadership authorities. Investors must understand the transformation which has been taking place in the last few decades in China. Firstly, China's economic growth is increasingly driven more by consumption rather than purely government and state-owned enterprises spending. Secondly, China continues to climb the value chain in the manufacturing sector by offering more higher value-added services and products due to the rise in research and development and talent pool. Last but not least, the government continues to balance growth and debt by focusing on SOE reform and deleveraging of the old economy.